Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. So let's check in what happened overnight. All eyes on the US Federal Reserve as it kept rates steady, pointing to the risks of both higher inflation and unemployment as it tries to measure the impact of President Trump's tariff policies. On Wall Street, trading was choppy before and after the Fed decision, which was expected by the market, while sentiment was boosted on optimism that the United States will reach deals with trading partners. And stocks jumped late in trading as the Commerce Department confirmed that the Trump administration plans to loosen restrictions on the export of advanced AI chips. Among the Mag 7, significant moves there from Nvidia, also Meta. The Dow was boosted by a jump in Disney shares after the entertainment company's quarterly results topped expectations. And Google parent Alphabet closed down heavily. That's one of the worst performers there in the session, while a report from iPhone maker Apple said it's exploring the option of adding AI search options to its web browsers, citing executives there. Apple's shares ending down slightly. And Advanced Micro Devices gave a strong revenue forecast, while Supermicro Computer fell on a disappointing projection. Uber reporting weaker than expected quarterly gross bookings, citing lower US inbound travel that's led to slower gains in its ride-sharing business. Well, the Federal Reserve has held its funds rate steady as widely expected, and regards to the US economy is still solid, with Fed Chair Jerome Powell emphasising patience.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
Well, the Fed's outlook highlights developing risks that could leave it with difficult choices in the coming months.
I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Meanwhile, US Treasury Secretary Scott Bessent has described the meeting with Chinese officials in Switzerland this weekend as negotiations, adding that it's just the beginning of the process. Well, US Treasury yields slipped after the Fed decision, as it noted that the risk of higher inflation and unemployment has increased. The US two-year Treasury yield falling to 3.76%, the 10-year was down to 4.26%. Markets now pricing in a 20% chance the Fed will cut rates by 25 basis points at the next meeting in mid-June. But 5 more cuts coming in the easing cycle. The US dollar index up around 0.5% on the day, and the Aussie fell back to 64.3 US cents. Bitcoin trading around 97,000 US dollars. Well, let's get across what we're seeing on Wall Street, particularly in the wake of the Fed meeting. Ira Epstein joining us from Linn Associates. Ira, welcome back. Good to see you. All right, so the Fed emphasising patience, but as we heard from Jerome Powell then, saying they're in a good place.
Yes and no. And the no part is, I heard you say that the market's pricing in a June cut. The same problem's going to be in June that you have now if we don't see more tariff impact. What the Fed is saying, and they tried to corner the Fed chair, was the idea there was, okay, why don't you get ahead of whatever's going to happen? There were numerous questions as to whether or not, I'm going to take a drink of water here. There were numerous questions coming in as to whether or not the Fed is going to be behind the curve again. Traders are, and analysts are trying to get the Fed to say, okay, labor is more important than inflation. He doesn't want to fall into that trap. So what he said, excuse me there, is right now what we have is a mixture. And the mixture is we have strong inflation in terms. It refuses to go down to the Fed number, the target, and labor stays strong. That could make stagflation, a word he didn't use.
All right, I'll let you take another breath there, maybe a drink of water there, Ira. But look, in the meantime, I mean, this is the difficulty the Fed faces at the moment, isn't it? That it is at the whim of Donald Trump. I mean, we could hear tomorrow that he's come up with a trade deal, the tariffs are off. How does the Fed respond to that? What choice does it have?
They have no choice. They're caught in a rock and a hard place. They want to see something so they can say, we're getting ahead of the curve, but they're not getting that. Every single day, almost, we get a change on the tariff policy. Today, it's about, as you know, the semiconductors out of left field. And I saw that pressure coming with Jason Wong when he was pressing all over financial TV that the policy is wrong and China's a $50 billion market and we're going to lose our share of it. He's not saying we should give them the top chips, but we certainly should be there for the medium and low grade chips. Well, you're getting that from A&D as well. So you put this all together and you saw what that was. The Fed can't second guess a president that every day something is changing. I know you realize that. We're also in that period where the other tariffs haven't kicked in. And the reason that this particular change in the semiconductor came is because the second phase of it, as set up by President Biden, is due to kick in about a week or so. So they said, hey, before that happens, let's make a change. And the president said one great thing. We're willing to sell Saudi Arabia F-35 jets, but we're not willing to sell them some chips? Doesn't make sense.
Ira, do you feel as though the markets, the equity market, setting itself up, it's taking a big leap of faith at the moment and potentially setting itself up for disappointment, given it's almost erased those losses we saw from Liberation Day?
Who do you want to listen to? Jeff Gundlach. You saw that today if you were watching him. He came out, he thinks the market's going to go back to the 4,500 level. Do you want to listen to Bill Miller, another great analyst who thinks the market is still going to go on and make new highs? I think you're caught in, you have to treat this temporarily as a trading affair. We know that we have an April 7th low in stock market indices. The market has gone straight up. We don't know what the tariffs are all going to be. We see the president is working on trying to get deals done, but nothing is done. He keeps saying he's going to have something important, and it's the boy who cried wolf. Eventually, you don't pay attention to it. I'm at that point. So every time that he sets you up to do something, until I see what a deal is and who he signs it with, I don't know. I still think the first deal will be with the UK or India, but we'll see if that part is correct. You saw yesterday with Mark Carney, the new Prime Minister of Canada, things went well for a difference. I really think the president didn't like Trudeau, but we're here about markets. And in the markets, again, the gold market is still an inflationary market. That hasn't changed. Was 3,500 probably too high at this time? Yes. Logical spot to come out. Bitcoin has come alive again. It's doing a nice job of holding the 95,000 level. Can it get to the 100? In the stock indices, I think it's back and forth action, and I would be a trader more than a player. In other words, a position player in the market. I think you want to hit and run in that market temporarily. And I think we're at a very important spot in all currencies where they have to make up their mind, how do they trade against the dollar here? Have we seen the dollar index bottom? If it gets back under the recent lows under 98, I don't think so. Then I think you've got another, it's scary. I can get another 8% out of that market on some of the work that I have.
Are we seeing the rest of the world leave the United States behind, or at least turning their backs? Because, I mean, you mentioned a deal could be done with the UK and India. Well, in fact, they've just done a deal between themselves. The Chinese. Right. China's heading to France after this meeting with Scott Bessent, so potentially a deal there as well.
This is a president that, remember the exceptionalism of America? You now can write that out. Exceptionalism is the word. Our partners are not happy with us. The American public is wondering. Those that are behind in the polls, in other words, behind Trump that voted for him, they're as stout as ever. They are not giving up on anything. But there's at the edge, there's problems, and the president has to do a deal. He is not going to get a deal done with China for a very long time. Unless you call a deal, we'll both roll back some of the tariffs that we had. As for a trade deal, nonsense. Not going to happen. China's going to play its hands right here, but they will get along with America. Nobody benefits from this. They do have 35, 40% less ships coming to America. But as you take a look at Canada, did you see their exports? While they're down to America, they're 25% bigger than the prior month to foreign countries. So you don't need America for everything. Our president thinks because we're the wealthiest that you have to have us. I think he's going to be proven to a certain part of that very wrong. And, as an American, I'm concerned about that. But this isn't a political show. This is about the markets. And in the markets, I'm not friendly energy. I'm a trader in more markets for my clients, telling them what to do in that sense. But I think it's very dangerous that you get overly bullish or bearish on U.S. stocks till we see some more data come in that shows us what this tariff really looks like. We're not seeing it yet.
So, Ira, how defensive do you want to be at the moment? Particularly, I guess, positioning in cash and gold, for instance.
Cash, gold, Bitcoin at this point in time. Currencies hitting and running. Not taking a longer term position just yet. I don't think that's the place. Staying completely away from interest rates at this point. So I like the short side of the energies. I like the long side of natural gas more than anything there. In the grains, I think it's very dangerous. Which way is the first deal going to go? The natural things for the president to do are to sell more grain and natural gas. Those are the, if you will, the low-hanging fruit that we can give to people. But you need to make a deal. I don't see a deal.
Ira, thanks for joining us from Linn Associates.
Thanks for having me.
Let's just quickly check in on commodities, see how they performed overnight. Oil prices heading lower again on doubts that the upcoming U.S. China trade talks will result in a breakthrough, while hopes for an Iran-U.S. nuclear deal ease supply concerns. Brent crude futures around 1.5% lower at $61 a barrel. Copper has fallen close to 3%, iron ore rising to $100 a tonne, and gold has extended losses, weighed down by a stronger US dollar and easing China-US trade tensions. US gold futures close to 1% lower at $3,391 an ounce. All right, well, look, we are expecting a moderately higher open when we get going in just a couple of minutes' time. Join us then.